It's about that time of day again. Back in the action once again. Hope you guys all had a great day out there. But time to get back to work, though. It's Thursday evening. It is November the 7th, 2019. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, guys, I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job is extremely important tonight because tonight I'm going to help you guys find the best levels of support and resistance for tomorrow, plan the best entries and exits for tomorrow, and most importantly, how to avoid those common traps for tomorrow. That's Friday's trading session. And we have quite a bit to talk about in tonight's video. We'll grab some charts tonight. We get some oil, some S&P, some Nasdaq, and some gold. We'll grab the calendar. We get a big holiday weekend coming up for all you veterans out there, and we're going to dive into what to expect in the next 72 to 96 hours in the markets. I got a lot to cover here tonight, so let's jump right into that oil chart here first. The black gold, the Texas T, it's a range market on oil. It's been like that all week. What goes down goes up. What goes up comes right back down. Let's grab that chart and put the plan together for that range-bound market for tomorrow morning. Now, as I mentioned, this market is still a range market, and we'll go into a lot more details tonight on the video. But of course, you can see here we got our trading range right in the middle. What goes down oftentimes comes right back. What goes up comes right back down again. So we can definitely see we are still right back in that same trading range, and we'll show you more about this as we dig into this tonight. We're right back into that range. It's a range market on crude oil. What does a range market tell us to do? A range market tells me to buy low. A range market tells me to sell high. And of course, most important thing right now is that short-term bear momentum. How do we apply a range with a bear bias to it, a bear momentum? Well, tonight in the video, we're going to talk about how we can buy the low, how we can sell the high, how to avoid that middle, right, and how to keep your eyes open for breakouts. So we're looking for selling opportunities on crude oil up inside the sell zones, buy zone, or buying opportunities down in the buy zone. I'm going to talk about the specific entry setups I'm watching for tomorrow later on in the video tonight, so make sure you stay tuned for more on that. Over on the S&P here tonight, S&P, of course, is a trending environment right now. We saw a nice big break higher here. Anytime we have a trending market, we always look for channels and measured moves. I've got a beautiful spike in channel here, and that spike in channel is probably the biggest clue on this chart because spike in channels tell me to look for that buy nice in that deep dip there. So I'm expecting this S&P to want to make its way back up to retest those highs. The problem is that we have a very strong bear move down. Notice that, right? That's a lot of bearishness as we're going lower. So how do we buy in a somewhat of a bear market here? We've got to use a very specific pattern. I'm looking for a pullback here, looking to get inside that battle zone for one of my favorite reversal patterns. You might know which one I'm talking about. If not, make sure you stay tuned for more tonight, and we'll talk about which entry pattern I want to look for on that pullback. I'm also anticipating maybe a short covering rally. I don't want to trade back inside this range, so we'll talk about the best way to trade this if it does make a run higher. And then maybe you're shaking your head right now going, this guy is crazy. You want to buy this thing? What if it is a bear market? What if we do make a run lower? What do I have to worry about down here? Because we do have that range from earlier on this week. And we'll talk about the best way to trade it if you're on the short side for the S&P. How about some Nasdaq here tonight? Nasdaq, as you can see, is back inside that range from earlier on this week. The Nasdaq looks very similar to the S&P, but there's a lot of key differences, which I'll highlight tonight in the video as we dive into this. Nasdaq is a range market. Range markets, of course, you can see that range, still same range. Nothing's changed from yesterday. Back inside of of that range. What does a range market tell us to do? It tells me to sell high. It tells me to buy low. It tells me to avoid that middle. Buying low, selling high. Tonight we'll talk about the specific patterns I want to sell high. We'll talk about the specific setups I'm looking for to buy low. We'll talk about how to stay out of trouble in the middle. And obviously, right, what if I'm wrong about this range? What if it is a spike in channel here and we do make a run all the way back up, because the Nasdaq is very, very close to the S&P as far as structure goes. And again, we'll talk about more detail tonight on the video. But if we do make a run higher here, what's the best way to trade it? Because right now it's a little bit difficult to want to buy this market, but we will be keeping our eyes open for two very simple patterns here, right? Two very simple patterns to be a buyer on this, but we've got to wait for more information. We'll talk more details on all of those pieces of the puzzle on the Nasdaq in tonight's video, so make sure you stay tuned for more on the NQ. And how about the gold? Well, gold is definitely going to be the most difficult. It doesn't look like it's going to be difficult at first, does it? Right? Pretty easy. Okay, it's a trending market. Anytime we have a trending market, we know we want to use channels. We want to use measured moves. So we know the bear market, we know it's a trend, right? The problem we have right now is it feels like this market's gone too far, hasn't it, right? We really pushed one leg down, two legs down, keeps on going. Now, I'm a little bit early right now to call this as a buy. I have a hard time saying to buy this, but I've got this level at 61.5, and that level may not seem very important, right? But it's a very, very important level. And tonight I'm going to talk about why that major support level makes me think this gold might be well, let's put it this way. The big movement down is probably over on gold, because this 61.5 area, I think, will eventually end up sending this thing back up into this 1480 to 1490 area for tomorrow. We're way too bearish to buy it right now, but I've got a couple patterns I'm watching for here. One off the battle zone at 65, one down off the battle zone off the 61 to 58. We'll talk about those kind of bottom picking setups here for us, right? For those reversals. We'll also talk about the best way to be a seller on this. And I'm going to give you a hint. It's not going to be easy. We're going to have to kind of go through a couple different scenarios tonight as far as how to be a seller, because bottom line is you can fight over the leftover scraps of these bears, or you can wait patiently for some more structure. We'll talk about what I'm looking for here tomorrow. Be very careful, though, on the gold until you see the rest of this video. So we'll talk more about the gold. The buy side is very intriguing on gold. The sell side is a little bit difficult, right, to structure right now. We'll talk about all the details I'm looking for the yellow metal here tomorrow. So we got everything ready to go, guys. Got the oil, S&P, Nasdaq, right? And that yellow metal, we're all locked and loaded. I've got you here. I'm here with you. We're ready to rock and roll. Before we jump into the video tonight, though, as I always do, I always want to remind you to make sure you join our mailing list. You may not be aware of this, but just before I publish this video every evening, I send out an email to everybody on our mailing list. That way, everybody in the mailing list knows exactly when the newsletter goes live. Also, you'll never miss another great video by being on our list. Most important thing, right before you finish up the video tonight, make sure you join our mailing list. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe to our mailing list, I'm going to send you a welcome email. Inside that welcome email has a verification link and a bunch of great free resources for you to say thank you for joining our community here at School of Trade. You've got to check that email, though. Check your email, find that welcome email, find that verification link. Click that verification link. That way I can keep sending you those emails like clockwork every evening when this video goes live. So don't delay. Before you finish up here tonight, make sure you join our mailing list. Name, email address, hit that subscribe now button, and then check your email inbox. And a heads up too, sometimes those welcome emails, sometimes they get stuck in your spam filter. So if you don't see the welcome email, check that spam folder. You might see us in there. And if we are in that spam filter, Unfortunately, for once in a while, trading-related newsletters get caught up in spam filters. Make sure you whitelist us. And if you have any questions about that, just give me a call in the office. How about questions about that? How about questions here? Do you have any questions for me tonight? Especially for all the new traders out there, I love to help you guys by answering all the questions in the comment section below. So if you have any questions about anything we're talking about here tonight, please feel free to post those questions down in the comment section. Or maybe you've got some feedback for me. How would you make this newsletter better? Or better yet, how can I make this video even more powerful than it already is? Let me know what you love. Let me know what you hate. I really appreciate that constructive criticism, right? So don't be afraid. Don't be bashful, right? Give me the honest truth there in the comment section below. I want to know how I can make this video the most effective for you. Let me know in the comment section below. And while you're down there, guys, do me a big favor, will you? Hit that thumbs up button for me while you're down in the comment section here on YouTube. I always appreciate you guys supporting this channel. So hit that thumbs up button if you tune in every evening to watch this video newsletter. It means a lot to me that you guys tune in, and I really appreciate it when you guys drop those questions in the comment section and hit that thumbs up button for me here on YouTube. And don't forget, if you have any questions, you can always call that toll-free phone number. Maybe you've got something a little more important or sensitive that you don't want to put in the comment section below, or maybe you have a question about how to get access to our free pass to our trade room or our free trading classes. Call that toll-free phone number. Use that live support tool in the upper right-hand corner, because I'm always here standing by to help you guys out. In the meantime, let's jump into the video tonight. Let's get this chart and get the calendar ready for tomorrow. Tomorrow, of course, is Friday, November the 8th. As I mentioned, throughout the entire week, this is the second week of the month. It's oftentimes a relatively quiet week as far as news goes, and tomorrow it's really no different. Tomorrow, of course, is a Friday trading session. There's not a lot of news, as you can see on the schedule, right? The only thing that's really kind of in our midst right now is this U.S.-China trade talk. We've been talking about this, right? This trade deal, we've been talking about this for weeks now, but as I mentioned earlier on this week, right, I thought that this week, it felt like this week was going to be a week where the markets were going to linger on this trade deal. They're ironing out all the details of this phase one trade deal. A few days ago, it sounded like there was no possibility of it. 24 hours ago, right, we heard some very positive rhetoric from the U.S., from the Chinese, but just a couple hours ago, there were conflicting reports that there might not be as easy to get the deal signed. So the soap opera continues, and I don't want to go back and forth on the yo-yo right now, but as you can see, these markets are, I'll call them obsessed, right? These markets are borderline obsessed about this trade deal right now. So we are definitely tuning in to be listening in to headlines right now. Now, don't get me wrong. I am not trading the headlines. What I am waiting for is when I see a headline come out, right, on our news feed, I then look at the chart then responds, and we then trade the chart, right? So we're not trading the headlines. I want to make sure that's very, very clear. But the point of this is there's no major news tomorrow, right? If we get some more headlines out of Asia overnight, right, out of the White House tomorrow morning, whatever it may be, that's probably going to be our biggest catalyst for tomorrow morning. That is the known unknown for tomorrow morning. Now, I've also got to warn you tomorrow. Tomorrow is a Friday ahead of a holiday weekend, the 11th day of the month. That's next Monday. That is the Veterans Day holiday. And let me take this opportunity to wish all the veterans out there, both in the U.S. and all over the world of ours, for your service, for your sacrifice, right? Always appreciate our veterans. So have a very happy Veterans Day, right, if I don't get a chance to say that to you in person on Monday. But definitely we're ahead of a holiday weekend. And a Friday is always going to be, right, early in, early out. But you want to have a good reason to be trading on a Friday morning after 11 o'clock Eastern time. On a holiday Friday, or a Friday ahead of a holiday weekend, you can expect that window of opportunity to be even smaller. So I would say tomorrow morning, as I always say, Friday morning, you've got to have a good reason to be trading after 11 o'clock. Hopefully we can get some setups early in the session so we don't have to stick around and wait too late towards that lunchtime hour of 11 a.m. Eastern time. So get to it early. There's no major news tomorrow morning. Keep your eyes and ears open for headlines. Trade the reaction, right? Don't trade what you think. Trade what you see. And don't forget, guys, we're going to go over the entire plan tonight here on the video, but we're going to get together every morning in our trade room, 8 o'clock Eastern time, and we're going to execute the plan together. Early in, early out, keeping our eyes on that trade deal headlines for tomorrow. And again, being very careful trading too late in the session tomorrow morning as we get closer to that lunchtime hour and that Veterans Day holiday. Again, a very happy Veterans Day out there to all the vets. And again, Monday being a holiday, be aware there'll be no newsletter, okay, on Monday evening. Jumping into our charts tonight here, we got some oil, we got some S&P, some Nasdaq, and of course some gold here. Let's start off first of all with oil, right? The black gold, the Texas tea, the crude oil futures. What type of market are we dealing with? This is a range market. This is the exact same range that we've been watching here for, all week here, really, right? Feels like for a month now, but it's definitely been just a week, right? We've had this expanding triangle, which we have talked quite extensively about here on this video. And of course, anytime we have a range market, the goal, of course, is to buy low and sell high. Buy low, sell high, and avoid the middle. So we can easily see kind of the situation, right? We're right back inside of that trading range. We don't want to trade inside the range right now. We want to be a seller up above those highs. We want to be a buyer down below those lows. And we want to stay out of the middle as best that we can. Now, as you can see here, I've got some levels I've marked up, right, to give you guys a heads up on that. I've got my range marked up. We know right now we have a bear bias right now. So we have a range-bound market with a bearish momentum move on the chart. So that definitely tells me I want to be a seller, right? That bearish move down tells me momentum now is stacked for the bears. I want to be a seller. I want to sell above the top of that trading range. So the strategy here is pretty simple, right? I've really got to kind of plan for one of three scenarios. One scenario would be we keep going sideways here. The second scenario would be we go up, right? I can sell back down from there. Or do we keep going lower, right? That's kind of the big thing we're waiting on right now to see if it keeps going lower here. The first thing right now is I hope we get a pullback, right? In an overall bearish move, I want to be a seller at resistance. So what I'm doing is I'm marking up those lows, I'm marking up that high, and again, I want to sell above the top of that range, and I can easily see that area just waiting overhead to be used as key resistance. Now, if we do get that pop higher, what's going to happen is we're going to go above that moving average. And whenever I see the market run above the moving average in a bear bias market that we have right now, I always know to look for a buyer failure pattern off the moving average. And that's pretty much what I'm looking for here off of these highs, right? We know we have a strong move down. We know we're back in the range, so we don't want to be trading inside of the range. What I want to be doing here is getting outside of that range. And when we do, I'll look for those buyers to try to buy off the moving average. It'll look something like this, right? Where it'll go up, the buyers will try to buy it, and of course we'll look to sell right into those stop losses, right? It's a pretty simple idea there, I think. Strong move down, we go up above the high of that range. I want to sell above the high of the range. I wait for the buyers to try to buy off the pullback, right? Buy off the moving average, and we're selling it right back down in. This is what I call a failure pattern, right? It's a buyer failure. The buyers take it up, they try to buy the pullback, they fail, and we're selling again in agreement with the trend, in agreement with the range. We're selling above the high of the range, following that momentum. Great plan of attack there. Now, what if we don't get a pullback? What if we sit inside the middle here for a while? Nothing really changes. We do have still a bear bias back into that range. So if we do end up going sideways here, right, in the short term, not a lot changes. I still want to be a seller up above that high. And to do that now, I'll use a 2-try failure pattern. We go up once, we go up twice, and again, it'll look very, very similar to that prior setup we marked over here, right? And we're looking for that failure back in from there. Again, a very similar pattern here, even if the market goes sideways. What if the market keeps going lower though? Okay, this is where things get interesting, because as it goes lower now, I want to be a buyer going back into the range, right? But the problem at that point now is going to be we're a little bit too bearish just to be buying, right? And we'll talk more about that as we go tonight on the rest of these markets. If the market sits sideways, okay, if the market sits sideways here and then tries to go lower, now that momentum isn't going to be a factor. And what I can do is I can use that breakout, look for a breakout failure, okay, breakout pullback failure, and I can buy right back into that trading range. You can see we use these type of failure patterns quite a bit during range-bound markets, right? So again, if the market goes sideways here, that will absorb a lot of the market's momentum. We know it's a range, so when it tries to go lower, we know we want to be a buyer. The easiest way to buy low is simply wait for the sellers to try to sell that pullback. And I can now buy right into their failure, right? I can buy into their stops. I can buy the pullback as long as the pullback does not get me inside that range. Does that make sense? Right? So if you were to see, for example, if it was to run higher here and then you don't get the pullback till up here, you wouldn't want to take that pullback right there. Make sense? So failure, skip the pullback. If the pullback's inside of, right, if it's inside the range, it's not a very reliable spot. What you want is you want that failure into pullback, and the pullback, of course, will come just below the low of that trading range. Now, again, that'll be if we go sideways here inside that range. What if we keep going lower, though? If we keep going lower, now we're way too bearish just to blindly buy it. And at this case, what I want is I want to use what I call a nested failure pattern. And that means I still want to buy. I don't want to sell yet. But assuming we keep grinding lower here or we go lower, what I'm going to do now is I'm going to wait for the bears to try once, higher high, try twice. And once I see those sellers trying once and trying twice, now I know the bears are fully committed, and now I know exactly where their stops are. Their stops are sitting right above that high. And again, range market, buy low. I'm buying going back up into that trading range, and I'm using the seller's stop losses as the fuel for that move going back higher. Does that make sense? So a quick recap here, guys. If we can get a pullback, right? Get a pullback. I'm looking for a buyer failure above that moving average, right? Look left. You can see a good example of that pattern right there. If we sit going sideways here for a while, not a lot changes. It's just a range-bound market. Want to buy low, sell high. To do that, we'll use the one try, two try failure pattern, which again was a good example back there. Or as we try to go lower, right? If the market goes sideways here for a while, we go one try, two try, buy it back up. Think of this as a breakout pullback pattern that fails, right? I call it a two try failure pattern because you got one try for the bears, two try for the bears, but think of it like a breakout pullback, right? Breakout pullback pattern. You know, rookies love breakout pullback patterns. The problem is most breakout pullbacks are going to fail in a range-bound market. Or if we just keep on tumbling lower, okay, momentum is way too bearish, but I don't want to sell because I'm underneath the range. Look for the one try for the bears, two try for the bears, and right back up. Again, make sure you get those sellers to try twice, and then we can make that run now going back up into that trading range. Now, the one thing we haven't talked about today is a breakout. What does a breakout of a range look like? A bull breakout, we'll start off with a big, strong move up, a pullback to the moving average, and a jump off the moving average. We call this a 1, 2, 3 breakout or a 1, 2, 3 reversal. Again, the key here is a strong first leg up. Second is a pullback to the moving average. And third is a nice strong jump off the moving average. Once we have that 1, 2, 3 breakout, I'm going to mark up that high, mark up that trend line, find that hidden channel, and that's going to give us our sweet spot. And I'm looking to be a buyer off the low of that, right, of that channel, right? Called a 1, 2, 3 breakout into a hidden channel pullback. Now, the same thing is true as we go lower, but as we go lower, we're going to really have to get through these areas, right, before we can call this a breakout market. So they're going to have to make it all the way down, hold and go. It's not going to be very easy to break this thing free for the bears, right? It'll be a whole lot easier for the buyers right now because they have all of that prior momentum. This could easily snap, hold the pullback, and run. The problem is I can't buy that pullback. Right? I can't buy that pullback. It's in a wrong spot. The market's context does not say buy up there, right? The market says buy down here, but not buy up here. And so we're going to have to see 1, 2, 3 break higher here if we're going to start buying as the market goes higher. Very difficult to justify being a seller, at least until we can break through and keep running below that $56 a barrel. So oil is looking good. We're a range-bound market. Buy low, sell high. Use those failure patterns, the 2-try failures, the nested failures. And don't forget, if you're here for the first time right now, I've got hundreds of examples of all of our favorite entry patterns on all of our favorite futures markets, included with our free trading course. So what I'll do is I'll put a link in the upper right-hand corner for you. That way you can register for our free trading classes. It also includes a free pass to our trade room so you can come out and learn the 3-step strategy, learn my favorite entry setups, and again, you'll see hundreds of examples of all my favorite patterns on my favorite futures markets. If you're on the blog right now at Sideways Markets, I'll put a big red button for you right below the video tonight on our trading blog. So grab the button below the video, or if you're on YouTube right now, hit the description up, right, and grab that link in the description, or hit that button in the upper right-hand corner. In the meantime, stay out of that middle on oil, buy low, sell high, and let's keep going. How about some S&P? S&P, is it a range or is it a trend right now? It's a trend market. Strong move up, pull back, right, higher high there. It's a trend market. There's a little bit of a range up there, as you can see, and that will definitely be a magnet. But I think the most important clue on this chart is that spike up, right, into that channel. And, you know, anytime we have a spike into a channel, we always expect to see a really deep pullback, right? And the deep pullback usually comes into the first pullback and the base of that channel. And that's exactly where we are right now. So even though it was a very rocky ride lower for the bulls, I would expect here right now to see a short covering rally back up into those highs here. Not to mention, most of this move down this afternoon was simply on more of the soap opera, right, from those trade talks. So I am looking for a chance to be a buyer here right now on the S&P. The problem we have is that we have all of this bearishness going lower, as you can see. And so what's the best way to be a buyer when the market is somewhat bearish like this? Is to look for that nested failure pattern. Remember that from the crude oil, right, to buy back up? So as we go lower, I'm looking for those bears to try once, I'm looking for these bears to try twice, and I'm ultimately looking for a buy down here in this rectangle area between 83 and a quarter and what is that, 80, 80 and a quarter, 80 half area there. That will give me what I need here for a 1, 2, right, in a nested failure pattern. So again, we know the market is overall bullish, right? We know we did see, again, a very strong move lower here. And so I definitely anticipate a short covering rally going back up to retest the high. I want to be a buyer down here. The problem is I don't want to buy too strong, too much into that strong resistance or into that bearish momentum, I should say. And so because of that, I want to let the bears try once, let them try twice. We're almost there right now. Just waiting right now for those sellers to finish up their second try. And again, really, I'm looking for that kind of a trap low below the 83 and a quarter swing. Looking for that move back down into that battle zone. Nice strong signal candle, and we can take this puppy back up into that trading range. That, of course, would be a nested failure pattern, or as I always say, a crown reversal pattern right here on the S&P right now. Looking for a trap below 83 and a quarter. You'll also see, of course, right, you've got that range overhead. The range makes for an easy magnet going higher, right? I would definitely make sure you take the majority of your profit off on that long side trade back inside of the range. But then look what we have here right now, another expanding triangle. We've talked about these a lot this week, and that leaves a lot to be desired. If we get some of those positive headlines regarding this trade deal with China, right, we may end up seeing this market really rally higher here tomorrow up to that 3,100. Right now, looking for that nested failure pattern off of that low. Right? But what if we don't pull back? What if it just runs higher? If it runs higher here without me, what I'll do is I'll mark up that high, find a new channel, and look to be a buyer off the low of that new hidden channel. Okay? That's a pretty easy plan, right? So if we do end up running higher here, up, back, and go. If it does make a run higher, we know where it's trying to go. It's going to go back into that range. I'm going to mark up that high, mark up that low, find that sweet spot, and that's ideally now where I'm looking to buy that pullback as we go higher here. Now, there is a chance it may just shoot back up and go right back into that trading range. At that point, this will be bullish, obviously, but we're back inside of, if it does go back in and kind of sit inside that trading range. How do we treat a range? We buy low, we sell high, and we avoid the middle. If we get a bull bias to it, what do? We buy underneath. What's the best pattern? A failure pattern. 1 try for the bears, 2 try for the bears, and right back up again. Again, when thinking about this, think about it as a breakout pullback that fails. Right? It's a breakout pullback that fails. As the market goes lower, the bears, they try to sell that pullback, and we're simply looking to buy into the stop losses of those sellers. So those are 3 scenarios to consider here as the market runs higher. Now, what about if the market runs lower? Right? What's the plan there? Well, one scenario would be because we have this strong move down, we may see this thing run all the way back down and then bounce back up again. Okay, that would complete what we call the 2-try rule here, which is a viable option. It does look like they already got the 1, 2 right there, which is why I'm looking to pick this bottom and go back in. It looks like they already got their 2 tries, right, going lower here. But who knows, right? Maybe something happens overnight, the market slams lower. If we can do a good job at kind of holding this trend line, I have no problem with that nested failure again, right? I will still love to see it as a trap for a crown reversal. I mean, that would be the ideal. But I would say right now, if we do get that second leg here, if we do get 1, 2, and we're seeing them hold, reasonably hold off that trend line, then you know what's going on. The buyers are just loading the boat as it goes lower here. So keep your eyes on now those bears trying once, trying twice, right, and back up from there. Why not just buy it? Okay, that might be a question of yours right now. Why not just buy it? Because again, the momentum is just too bearish. And so what happens a lot of times is it'll go up and just run you right out, right? You don't want to make that mistake. That's a rookie mistake. It's very difficult to time your entries properly when you're going against the trend, right? If it runs lower to one more leg lower, if we get that second leg, okay, that momentum is still very bearish. Again, we're in an area where a buy could be definitely a very prosperous buy here, but we have to respect the momentum. We have to wait for those sellers try once, try twice, and then back up right into that trading range. So those are a couple scenarios, right, that you want to think about as we try to go lower. Now, obviously, if they can take this thing down again, well, then now we've got no excuse. Now the market is definitely bearish. I'm going to mark up that low, mark up that high, and look for that sell off the top of that channel. And that might end up being, if you kind of look at this, if we end up, let's say we end up running lower here, right? I mark up that low, I mark up that low, I mark up that high. Maybe it's the same channel I have right now. Maybe it isn't. You can easily anticipate now how that may set up, right? We pop up, buyer failure, into seller pullback, and back down from there. Does that make sense? Right? It's a buyer failure into a seller pullback pattern, again, off the top of that channel. right? Top of that channel. That's, again, critical, though. We've got to get that strong move lower if I'm going to give up on the buy side right now. So I think we got a plan pretty well laid out here for you guys. I'm looking for a second try here to be a buyer, right, off that crown reversal or that nested two-try failure. If we do make that run higher here, don't chase it. Find your channel, wait for the pullback. Okay, if we don't get that pullback and the market runs back in, just be careful about this range up here. If it does sit inside the range, you want to make sure you buy underneath it with what pattern again? One try, two try. Again, think of it like a breakout pullback failure pattern, making sure you're buying underneath that range. And then again, you want to be trying to leave those targets up around that big round number, because I would imagine that should be a relatively easy target if these buyers can clear through right back up into that trading range. If we do see this thing move lower here again and then pop right back up, 1 and 2, right? Again, two try failure. It's a nested failure pattern. We use the nested pattern when we're trying to buy against a bearish momentum. And we'll talk about that more right on the opposite side here on other charts tonight. Or if it does end up continuing running lower, mark up those lows, mark up those highs, find your sweet spot, and we're selling off of those highs. That's the best pattern to use as we go lower. Now, the target's pretty easy for the upside, right? Back into the range, back to retest the high. But honestly, if we get to 97, I'll be very surprised if we don't get to 3,100. Let's put it that way, especially since you got that trend line. So I would say the big targets for me tomorrow are the range and that big round number. I think the high of day there, if they can get towards the high of day, they will get to that 3,100. What about the sell side, though? Where is the target now for the sell side? That low, right? That low at 30.63. Now, 30.63 should sound familiar, right? It should sound familiar because that was the gap from late last week, right? Remember that weekend gap? Yeah, that 63 level was the gap. So 63 is a very easy target for those sellers. And, just looking at it right now, you could easily say that's one big spanning triangle there. So, again, if the bears can take it, again, this is all kind of, hinging on the fact that the bears have to put up right now, right? They've got to show us they want to defend this right now, because from what it looks to me, it looks like this is a spiking channel. It looks like they're pulling back into the base of that channel. And it looks to me like we're going to be headed right back up, right, to retest those highs. I got a bunch of things I'm watching for right now. And again, don't forget, every morning in our trade room, Monday through Friday, we're going to execute the plan together. So make sure you don't do it alone and come out and see me sometime as a brand new member in the trade room. Let's keep going. Nasdaq here up next. Now, the Nasdaq, you'll notice, looks very similar here to the S&P, but there's one big difference. The Nasdaq comes all the way back down into that range from earlier on this week. We didn't get that deep of a pullback on the S&P. The S&P might end up down there, but right now the S&P looks a whole lot more bullish than this Nasdaq does. The Nasdaq, for the most part, is a range market right now, right? There's your range. The range kind of, first kind of became an issue earlier this week. Okay, we saw the move lower, back into the range, the pendulum swing, right, back up. We talked about this last night, obviously, on the newsletter. But now you can see, though, mark up your expanding triangle, and this could easily now, end up right back down, right, to that, 81.70 area, down around the low of the expanding triangle. The most important thing right now, though, is we are back inside the range. Range-bound markets tell us to buy low, sell high, and avoid the middle. We know that this range has a distinct bearish tone to it right now because of all of that movement that we saw coming off those highs today. So we know the bears definitely have the edge at this point, at least. It may not last very much longer. Again, on the S&P, I saw the S&P as a spike and channel, right? And of course, it tells you to buy that low, right? So you can see why I say the Nasdaq just looks a lot it just looks a lot heavier than the S&P does. And I might be wrong. You gotta be okay with being wrong as a professional trader. This thing may snap right back up for all I know, and just it may have overcorrected itself for some reason, right? And we may go back higher again. Right now, though, we don't have that look to this chart. This chart looks like they had the chance to hold this pullback, but just simply couldn't get it done, and it collapsed back down into that trading range. So that's the big key difference here to the S&P and the Nasdaq. The S&P just simply feels like it's holding on to that low. May not hold very much longer, but it feels like as of right now, the S&P is holding on. The Nasdaq feels like it broke right back here and went back into that trading range. And anytime we see it come back and kiss the range low, right? Give a range high, a little high five there. You can definitely tell this range is still on the minds of this Nasdaq. So range bound market, buy low, sell high, bear bias, right? Bear bias, sell high. Now, I don't want to repeat everything from earlier this week, but we have a range, right? The size of that range determines my sell zones and my buy zones, right? The size of that range determines the buy zones and the sell zones. And we'll talk more about how to define the range correctly, in our video courses. I talk a lot about the range bound strategy, obviously, in that free trading class that I mentioned earlier. So make sure you grab that if you haven't done so already. I've marked up that level to that level. That's kind of an anticipated measured move down there. We obviously don't know exactly where that measured move will be, but keep an eye on that for tomorrow as well if you're doing this on your own tomorrow morning. I know I'm bearish. I know I want to be a seller. I know I want to sell at resistance. I've got this sell zone overhead. That's an important level of resistance. I've marked up these lows. That seems to fit like a glove up there. That is a reliable level of resistance. I've also got, as we go lower, that prior swing. That is a great level of resistance. So hopefully by now, hopefully you can see there's quite a bit of interesting resistance up inside this sell zone here overhead. So how exactly do we go about selling this market? Well, first of all, I want to see us get up into that area of resistance. When we do, that moving average now will be below the market, right? Below the market means the buyers will likely try to buy that pullback. And when they do, now we know exactly where their stops are. More importantly, where their pain points are. That's the psychology that makes these failures so successful, because when the buyers realize they're wrong and they start seeing red on their P&L, they're not going to wait around. They're going to bail on this trade, and when they sell out of that long position, you'll be ready to sell right there with them. You get the buyers selling, the sellers selling, and the market oftentimes collapses right back down again. Now, if we get lucky, we get a failure into a pullback. Remember, those pullbacks are not guaranteed to be outside the range. So if you grab a failure pattern, right, into a pullback pattern there, right, make sure that pullback pattern is outside of that trading range. We do see this, right, quite often where no trade zone, battle zone, rid of those here. We do see quite often where we'll see a good failure pattern, right, a good buyer failure pattern, but then the moving average comes over and you're left with a pullback right inside the range. You know what I mean? That's just not a good spot for that pullback. So that's the only kind of caveat here. We go up, get these buyers now to try to buy it, right? Get them to buy that pullback. We now know what the stops are. We're selling into those stops. We're hopefully getting a chance to sell that pullback, right? And we can make that run back down from there, right? A failure into a pullback combination setup. Failure into pullback combination. Now, what if this mark keeps going higher? What if it keeps going higher, right? What if it holds? Strong move up, holds the pullback. This is what a reversal will look like, right? Holds the pullback and jumps. Okay, that is a 1, 2, 3 reversal. What's the best way to trade it? Mark the high, find the trend line, define the channel. Now you know your sweet spot and you're waiting to buy the pullback. Where's my target? Target's pretty easy, right? Back up to retest that high at 82.5. Now, what if we don't get that pullback? What if the market runs You know what I mean, right? It doesn't pull back and go. It just off to the races. See ya, suckers. What if it runs? If it runs, what you want to look for is that two-try breakout, or as we call it, a FOMO breakout. Bears try once, bears try twice, and because you've got some overhead resistance here, you want to be patient and wait for a trap low. Makes sense, right? Want to be patient and wait for that trap low. Remember what's going to happen here. Once we see that strong move higher, you're going to see buyers who are already in, they're going to take some profit. That's the first pullback. Then what happens is sellers will step in and they'll wait to short that trap high, right? The bears will try to sell that thing and take it lower, right? Like back here, right? We go up, pull back. The bears come in, try to sell it off that top. What you want to do is you want to let those sellers now, let them try that second time, find that swing. Again, I call this a two-try breakout, or my very affectionately named the FOMO breakout, because that strong breakout, right, is that strong break higher. That's the FOMO, right? That's where the fear of missing out kicks into gear. Everyone starts chasing it. You're not going to chase it. You're going to wait for that, right? That silver platter buy while all the rookies are getting chopped up trying to buy high and then getting stopped out on that tight stop. You'll be ready there to buy right when those rookies get stopped out. And finish off that pendulum swing, right, or that retest of that high at that 82, right, 0.5. Now, what if we sink back into the range here? If we sink back into the range, not a lot changes. We're still a bear market into a range. Okay, what does the range tell me to do? Buy low, sell high. So two options, right? One would be we go up, 1 and 2, back down again. Again, think of this like a breakout pullback failure, right? Let the buyers try to buy that pullback, sell into their stop losses. Or if the market goes sideways, right? If it goes sideways here, 1 try, 2 try, back up in. Same idea. Again, if the market goes sideways here in the overnight or in the pre-market, right? So if we end up back inside that range here and we sit here for a while, 1 try, 2 try, sell back down, 1 try, 2 try, buy back up. And again, think of it like a breakout pullback failure pattern, right? You let the market try to go lower, right? Again, we go sideways, bears take it lower, moving average comes over, breakout sellers think this is a successful bear market. It's not, it's actually a range, and we're buying right underneath it using that seller failure setup. Now remember, that is a very different story than if we just run lower here, right? If we run lower, where are we trying to go here? Well, there's a lot of potential here for these bears. You get that pendulum swing. Remember, in a range market, the amount of the move above the range is oftentimes symmetrical to the amount below the range. Okay, this one went pretty far outside that range today, so it's very, very easy to see how the pendulum could swing, and this thing could just rip it lower here, right? It collapsed back lower here. So this whole area, you got, of course, yesterday's low. You've got the low of this, right? The low of that kind of triangle, so to speak, there, right? So those are the targets there for the bears. But let's plan this out, though. How do we buy it, right? Again, we talked about if the market goes sideways into the range here, if this thing just takes off and starts running lower here, I can't be too aggressive being a buyer on this. I have to wait for a 1, a 2, and again, because it's so bearish at that point, I'm going to look for that crown reversal. Right? It's a nested failure with a trap low. Okay? And again, I'm going to want to make sure I do it down inside these buy zones. Okay? So as we go lower, if they sit inside the range for a while, that negates all of that bearishness. So now I can go 1, again, in the buy zone here and back up into that range. But if it just tumbles and keeps running lower, the only way to be a buyer on this is going to be after 1, after 2, and again, I'd like to get a trap low on this to buy it right back up into that trading range. Okay, it's all about momentum. And again, it's a range market. Buy low, sell high. The problem, though, is when that momentum is really strong, we can't just buy low. We've got to respect that momentum. Let them take a couple swings at it before we can make that buy going back higher. Now, is there any scenario here where I could be a seller on this? Yeah, you definitely could. If we see a very strong move down, let's get rid of this channel here for a moment, right? Let's say we see a very strong move down. One easy pattern would be a 1, 2, 3 breakout. It's not really a breakout, but again, it's kind of a 1, 2, 3 real strong move. You're going to probably be able to get that sell off the top of that hidden channel, right? That'll probably be good for at least 1, maybe 2 targets. I wouldn't get too aggressive on that final target, because again, you're running that pendulum swing. But if you can get into this right before that pendulum swing is completed, before you get down to that China low, that'll be a good trade, right? But again, make no mistake, this needs to be very strong, right? I don't want to see the lazy, right? You're definitely not doing that if it's inside the range. Right? If it sits inside that range and then it goes like, no, right? Very, very different there, right? I'm talking about we blast lower here. 1, 2, 3, running hot, right? Find that hidden channel and we're selling off that channel. Again, the caveat is there has to be that feeling of I'm going to miss out, like we saw, right, in the pre-market or in the Asian session after last night's newsletter, right? That strong run up, right? That type of, oh my goodness, I better not miss this. That type of feeling is required as we go lower, which reminds me, a 2-try breakout with a 1 and a 2 would also work, right? So 1, 2. So as we get a strong move down, the buyers try once, the buyers try twice, and you've got that trap, in this case, trap high, right? Just like those buyers were waiting for their trap low, right, to be a buyer back there. Same basic idea, right? As the market runs lower, let those buyers try once, right? Let them try twice. And again, you just don't want to sell too low. That's the reason why a trap is going to be your most effective pattern down there, because you've got that, that target, so to speak, right? The pendulum swing, the low of the day from yesterday, and that expanding triangle as we go. So Nasdaq definitely going to require some momentum as we go lower if you're going to want to be a seller on this. I would love to see us go 1, 2, 3, right? Reversal here, find that new channel. I don't care what direction I trade, right? I don't care what direction we go here on this, but a 1, 2, 3 reversal, buy off that low, retest the high, that sounds great. Or do we pop up, get that buyer failure, and drop it back into that range? That is going to be an easy pattern as well. The hardest thing tomorrow will likely be staying out of that middle, right? If it does sit back inside that 82.20, 1 try, 2 try, back down in, 1 try, 2 try, back up in. And again, as always, guys, don't forget, I'm just simply drawing on the screen right now. I've got a lot more details included for you guys inside that free trading course. So make sure you grab the free course in the upper right-hand corner. In the meantime here, we're getting late on this video. Thank you so much for sticking around me right now on the video tonight. Let's wrap it up with the yellow metal, the gold futures. So I mentioned this in the beginning here on the gold. Gold is one of those scenarios where, simply put, it's too bearish to buy, but it's way too low to sell. It's too bearish to buy, but it's way too low to sell, right? When we got that 1, 2, 3, you're trying to find some way to get in up here, right? And it just never pulled back, right? It never pulled back. And gold's reacting to a lot of the soap opera going on right now about this trade deal, and it's very jumpy. So we never really got the chance to kind of finish off this 1, 2, 3-legged move. And it looks to me, and again, I could be wrong on this, but from what I can see, it looks like we just simply went too far. And this reminds me of when I was a rookie and I would wait for the pullback, wait for the pullback, wait for the pullback. We never get the pullback. I finally get the pullback. It's a beautiful pattern. And what does it do? It fails, right? I call that the rope-a-dope. Right? The rope-a-dope. not that you're a dope or anything personal on that, right? But I call that a rope-a-dope because what happens is as the market's going lower, everyone's waiting. And then towards the very end of the move, we get this perfect pullback and it just goes nowhere and shoots back in the other direction as if everybody in the market is laughing at me for being the last person into that move down. That's what I'm worried about on this gold. Just looking at the chart, I think I'm way too low to sell this thing right now. Now, that is only one piece of the puzzle because let's go back left here. I mentioned earlier that 61.5 is a pretty important level, and it really is because if you recall, gold spent a while inside of a trading range, didn't it? Remember this range? This range should look pretty familiar, right? Because this beautiful little range right here, right? It's actually a pretty ugly range, right? That range completely dominated gold almost the entire month of October. What do we know about a range? Buy low, sell high, avoid the middle. Well, there's my range. Okay, I'm not sure I want to be a buyer just yet, but what else did we talk about? We talked about the amount of the move above the range is oftentimes the amount of the move, what in the, what? 1461.5, that is your pendulum swing. Imagine there is a big pendulum right on the chart. We swing up, we swing down. That's why I said in the introduction, and that's why I'll say it again, I think this market eventually will end up back up into that 1490 and maybe all the way back up to that 1500 before the middle of next week, right? Tomorrow may not be that full-blown reversal, but we're kind of keeping our eyes on this as we go. So as you can see though, none of what I've described so far says buy this market, does it? No, right? There's no reliable trading strategy that says buy when you think we've gone too far, is there? Right? What's the old saying? The market can remain irrational longer than I can remain solvent. I can't just buy this right now because I think we've gone too far or because we're sitting on major support. If buying every time we hit a major support level, if that was a reliable strategy, well, you would be watching this right now. I wouldn't be recording this video right now because everybody would be gazillionaires in trading if it was as simple as buying at support, right, or selling at resistance. So we know the market's way too bearish to buy right now, but it's so far oversold. It's right at that major support. So what do we expect here right now? What I expect is there to be a bloody mess down here, right? I expect to see a lot like we saw, 2 days ago, right? Yesterday, right? So remember how they had that big move down on gold before, right? That big move down on gold before. It just got chopped up beyond belief. That's what I'm expecting more of tomorrow, especially since tomorrow's a Friday, going to be an early in, early out scenario. What I really want to wait for right now is I want to wait for really one of three scenarios. One scenario is I want to see a range down here. If I can get a range on this chart, I can structure everything I need to be buying low and to be selling high. But right now, we don't quite have it yet. That's a big challenge, and that's where I got to wait for more information. The second scenario is I'd like to consider being a buyer off a crown reversal or get that second move down and crown reversal off of that low. Okay, that's the second scenario here. The third scenario is going to be what I really hope we get, and that is a 1, 2, 3 reversal. Get this channel off of there for now. Right? If we can get them to hold this pullback and jump, I can now mark up those highs, mark up those lows, and I can now be a buyer right off of that low for that short covering rally going back up into that range, or right a strong move up with a 2-try breakout pattern, right? That FOMO breakout pattern as we go. So I know this has been a long-winded kind of introduction on this. We're too low to sell, but we're too bearish to buy. So what do I want to see to be a seller here right now? What I really want to see to be a seller is I want to see some more information. Okay, I want to see some more information. I'm expecting with this much strength going lower, I'm expecting that sellers have one objective, and that is to retest that low. Okay, I would assume that the bears, they want to get that low. Once they get that low, it's anybody's guess. They may see it rally higher, profit taking, rally higher, or it may keep running lower. So really there are, again, there's a lot of unknowns right now. Let's get rid of this stuff here right now. This is the measured move, by the way. We take that, right, that big leg down. They blew right through the measured move, obviously. Take that leg, bring it on down. It's like a juiced up Elliott wave, right? Where leg 1 and wave 5 are symmetrical. It's very difficult to tell, though. This is not looking at Elliott wave because that 3 is so big out there. I think they got what they came for, but again, I can't just buy it. I get that strong move down. I'm expecting to see a retest of that low. I am. Right? I'm expecting to see a retest of that low. So really there's two scenarios that I want to be a seller right now. And that would be they go back to retest the low, or really what I need here is a range. Like I mentioned earlier, right? I need some sort of range to show up. Because if I can get a range, then I can structure this a whole lot better. If we can get some sort of range down here, which is very common after a strong move down, we almost always see a trading range. If I can get a range to use, then I can use the 1 try, the 2 try, and I can sell above that range tomorrow. Right? If I can get that range on the chart, then I can look for the buyers to try the breakout, buyers try to hold the breakout, pull back. We can sell back down into that trading range. If we also get a range tomorrow, right? If that range also shows up, come on here. If we also see a range here, I can also structure a buy underneath it. So again, I can go up 1, right, and then sell into that buyer failure. What I'd like to do though is grab a crown reversal, 1 try, 2 try, and buy off of that low, right? Because this is where I think, this is one of those times where there's not a lot of profit left for the sellers. And I think that if you want to be a seller right now, I think you're about 12 hours too late. I think this market is, I'm not going to say we can't go lower, but it's going to be a bloody mess trying to go lower because everyone's going to be trying to chase after it and squeeze out whatever little profit is left in this market right now to the downside. It's a lot like squeezing water out of a stone. There's not much available left here for the bears. So I'd like to be patient and look for a chance to be a buyer, but I have to be very careful because it's so bearish right now. So one of the ways to do it is if we can get that range to form, then I can start structuring that trade underneath it, right? Underneath that range. So being a seller, right? Being a seller, one scenario would be we go into a range here, we go up, again, buyer failure, back down again, or show me proof. Show me this 61.5 area is nothing more than some arbitrary level. Show me a 1, 2, 3 breakdown, and I'll gladly grab that hidden channel, and I'll gladly follow you lower. But I'm not going to try to predict right now. I'm not going to jump into it right now, though. That seems to be a little bit too late to the party. Make sense? So 2 ways to sell this. One is to sell up with a failure. Again, I wouldn't do it right now, though, because you got that trend line right in the way. A failure pattern right now is just, again, this is kind of reminds me of what I call the rope-a-dope, right? Where you're waiting, and then finally you get that pullback, right? You grab it, and what happens? It rips your face off. It ropes you in, and you feel like a dope, right, for waiting that long to sell this low. This is why I tell my clients that market context is, like you said last night, market context is so important right now. You can have a beautiful pattern, but the best pattern's not going to give you a good result if you're doing it in the wrong location. Context is horrible right now to be a seller. Right, what I'd rather have is get that range. Give me some proof, get a range here. Then I can sell above the high with that 2-try failure pattern. And make sure you check out that free course so you can learn more about the failure pattern I'm talking about, or the 1, 2, 3 breakdown. Right, find that hidden channel, and then we can go forward from there. Right, but I've got to see that strong break through that low here before I can even think about being a seller down here. So those are really the only 2 ways I can be a bear on this right now. It's really what I'm looking for here is a range tomorrow or continuation. The second scenario now would be the aggressive one here is a crown reversal, a trap low. What you want to see on this is a move back below the moving average, a strong signal candle coming off of that trap low. You've got to get down inside that 65 to 64 level. I would like to see even more, a little tap below that low. I'd love to see us go to like 63.9, right? And then see those algos kick in and rip it higher. That's going to be a great, great setup if we can get it. We may not, right? They may just run right over, right back into that area. There's your measured move now. Again, way too bearish to sell down here, but I can try to be a buyer with the right pattern. I can look for that 1, that 2, and again, because we're so bearish, right, I want to look for that crown reversal. Same idea. It's a nested failure, right, with that trap low. That will be your right. That will be your odds enhanced. It'll be your reliable setup to buy back in the other direction. Now, don't forget too, we may also see it really run, right? 1, 2, 3 jump, right? So don't be surprised if we see something like that, and all of a sudden now 1, 2, 3 reversal, and we're now looking at the bull market now buying off of that low. That could also happen tomorrow as well, right? We get that second leg. And then it's 1, 2, 3, and we're gone. So watch for that too. We'll mark up that low, mark up that, right? Mark up that channel, and we're buying off of that low. Or, as I mentioned earlier, if we do hold that pullback and jump, great, mark up the high. That would honestly be the easiest out of all of this. If they do get that 1, 2, 3 reversal, that would be the easiest out of all of this. Hopefully we get it. Or we see a strong shot higher, 1 try, 2 try. We have so much room overhead, right? There's so much open space overhead that if we can get a strong move up like this, a 1, a 2, I won't even need to have a trap on this to be reliable. Makes sense? Because there's so much space overhead for this thing to run, and because it can get very aggressive on that, all I really need is that, right, set the table with that strong move up, and then 1 try for the bears, 2 try for the bears, that FOMO breakout pattern, because I'm not worried about overhead resistance. I don't need that trap low on that setup. So ideally what I want here is a range tomorrow. The range would really make my day easier tomorrow to sell high, to buy low, and kind of play that game back and forth on this range, right? Or do we see that trap low with that crown reversal or run lower? Again, strong move down. We should get that second leg here. 1, 2, trap, and back up from there. Tomorrow is surely going to be an opportunity to catch that short covering rally, but we need to wait for the right timing. We don't want to just close our eyes and hope for the best right now on the gold. Remember, early in, early out on the yellow metal and all the markets really for tomorrow, because again, we are ahead of that holiday weekend. And as I mentioned earlier, right, I want to wish you guys all a very, very happy holiday weekend, especially all you veterans out there. So make sure you hug a veteran here this weekend. And if you really want to make me happy, donate your time to your local veterans hospital. There's a lot of people out there that don't have families around anymore, and they would really love to see your smiling face this weekend on Veterans Day, right? So pay it forward for me here, right? Use my advice, right? You'll feel great about yourself. You'll help somebody else's day brighten up here. It really is a weekend that you want to spend, right, thanking your veterans here, because I really appreciate all the hard work you guys do out there. And don't forget, no newsletter on Monday. Monday, of course, with a holiday coming up here. Make sure, though, you join me every morning in our trade room at 8 o'clock Eastern time. You can get registered. It's very, very easy. You can register for our membership, right? Join me every morning, Monday through Friday, in our trade room at 8 o'clock Eastern time. Grab the advanced course right on the homepage of our website, or if you're on the YouTube channel right now, I'll put all the important links for you in the description of that YouTube video. If you're here on the blog at sidewaysmarkets.com, there's a big blue button right below the video tonight on the blog. So whatever it takes, go to the website, grab the description of the YouTube channel or that big blue button below me tonight on the trading blog and get registered. That way you don't have to do this all on your own. It's really stressful. It's lonely. It's expensive to learn to do this all on your own. I'll tell you right now, we all have to pay our tuition to the markets. Either you pay it to a coach or you pay it to the markets. One of them is really, really painful and not a lot of fun. I'll let you decide which one is a better fit for you. you. I look forward to seeing you guys soon in the trade room. If not, make sure you grab that free trial, register for our free classes here at School of Trade, and have a great, great holiday weekend. We'll see you guys, if not tomorrow morning in the trade room, we'll see you guys next Tuesday evening on the next edition of this nightly newsletter. As always, my name is Joseph. Thank you so much for tuning in every evening. Happy Veterans Day to all you guys and gals out there, and we'll see you guys next time. Adios, amigos. Bye-bye for now.